Welcome back, folks. This is the ICT Mentorship Daily Log Entry for Monday, April 5th, 2021. Now, usually we do the 15-minute time frame on dollar, euro, and cable, but just to get myself back up to speed, I'm including the daily 1 hour and 15-minute time frames respectively. All right, here's the dollar daily chart, and last time we spoke, said we were going to trade up into this volume imbalance turn fair value gap, and here we have it hitting it right there and trading back down into the lower volume imbalance turn fair value gap. So what I'm watching to see is if do we have an interest in accumulating inside of here with this old high, or do we need to drop back down in and close in these two volume imbalances, this one and this one? And does it continue to move higher, or have we made a intermediate term high for the dollar index? It's a little too early to tell, but I want you to take a look at the sensitivity at that level relative to this volume imbalance turn fair value gap. And I want you to consider how that level lines up with nothing else. Like if you weren't looking at this area and I drew your attention to it beforehand, you never would have anticipated some turning point like that forming. And it's one of the cool things about learning what you're learning here in the mentorship is it gives you visibility that isn't found anywhere else. All right, using the insight from the daily, dropping down into the hourly chart, here's that discount level on the uppermost volume imbalance turn fair value gap on the daily chart. That's it, trading into it here. Creates a sell side imbalance, buy side inefficiency, trades back up in the consequent encroachment of that, breaks down. We have this low and this high for your redelivered rebalance. All of this back and forth delivery, we just cut through all that by going to this candle here and here, and consequent encroachment of that range. Equilibrium from this swing high. Why this swing high, not this swing high or this swing high? Because we moved dynamically away from this swing high. So this swing high to this swing low, that's what I'm annotating with these little triangles. Trades back up into it here, and once more here, and then finally heavy distribution, attacking sell side liquidity and trading lower into the consequent encroachment of the lower daily volume imbalance fair value gap. And then dropping down into the 15-minute time frame for the dollar, relative equal highs, and we have this old fair value gap extended in time. See us trading into that, running the buy side liquidity, breaks down, short-term swing, breaking market structure, trades back up into, again, consequent encroachment of this fair value gap. Here, rejection block, sells off, aggressive run to sell side liquidity, and again down into consequent encroachment of the lower daily volume imbalance fair value gap. And this is again is that redelivered rebalance ranges. Euro dollar daily chart, bullish order block here, and we traded down just one pipette below that high. Look at your own charts here and you'll see that. And this low here on the down close candle, that is mitigation. So the mitigation block is here. We'll look to see if it wants to trade up into that, which would also go just outside of the scope of this fair value gap here in the form of a sell side imbalance, buy side inefficiency. So we can see it trade up into there. If we start to gain momentum above that, this is the only other area that would be of importance on the upside. It could trade there, but I'm not abandoning the idea of it eventually taking these lows out for now. Okay, so we'll take a look at that as we go. We'll take a look at that into Tuesday and Wednesday's trading. Euro dollar, 60-minute chart, buy side liquidity pool, buy side liquidity pool. The market trades down below sell side liquidity, hits the daily bullish order block, rallies, creates a fair value gap, trades down into the buy side imbalance, sell side inefficiency, which is the fair value gap. It rallies, comes back down into the order block here, rallies, trades above this high. Now this high and this low, extend those levels in time, that's mitigation. It trades down inside of that range, also into the order block, the biggest down close candle with the highest up close. We don't look at this with the wick. We don't care about that. This is the proper order block. Why? Because all of this tail here is just running on liquidity. It's stopped running on the short-term high. So the down close candle with the uppermost open price inside of the range I'm looking for, what range? The mitigation block, high to low. There it is, trading into optimal trade entry, which is low to high, trades in, or you can use low to high and trades back in. Then we have a price run into the buy side liquidity here, another short-term one here, and then here. Now I had a recording I did on my Telegram channel today, and I was watching price as it was running up here. I got to the charts a little late, but it runs up into this level here, and I outline this before it gets there. So I'm studying in the recording the price run there, and I did some counter trend enigma trades in here just to pump up the balance on this paper trading account. This level here is what I'm watching to see if we have any momentum to get up to. We have a breaker in here. Not that I think it needs to come back down in there, but it's worth mentioning here. And we have a small little imbalance there. I'm only interested into the close of that candle, not an entire close, if it trades back down in. So we'll see if it's going to be bullish and the dollar finds its way bearish. This area in here will be of interest to me. Euro-dollar 15-minute time frame, buy side liquidity pool, and buy side liquidity pool, as I mentioned on the hourly chart. After hitting the OTE and bullish order block, strong repricing. So this right here is hard to get into because it didn't give you much of a retracement, it didn't give you institutional order flow. I was watching this candle here, seeing if it would have come back down into it. I would have bought there with a run to there, but it didn't even retrace at all, just kept repricing higher. So that's why it turned into just me watching these levels here in a recording. Still worth noting that that's what you're supposed to be doing every single day. It's not always a trade execution. It's studying where the draw liquidity is, where it's going to be pulling to. I gave homework in the Telegram channel, and I want you all to be a participant of that as well. This week, I want you to look at your 15-minute or 60-minute charts. Each day, I want you to try to annotate which swing high on that time frame, whether it be 15 or 60 minute, so hourly or 15-minute chart. Find a range that sees a old high or an old low ran out that has at least 15 pips from the time you start monitoring it until it runs to that high or runs to that low. Try not to think more of it than I just outlined. And basically, what I'm saying is, if you were thinking it was going to run from here to here, well, that would fit because it's more than 15 pips. It's got to be at least 15 pips to run an old high on the 15 or 60-minute chart. Once you find one of them for the day, it can be done in hindsight. It doesn't have to be real time. Okay, it's better if you do it real time, but in hindsight, it's just as well because you're learning how to look for runs on liquidity. British pound versus US dollar. This is our daily chart. Down close candle here. Bullish order block extending out in time. Hits it handsomely in here. Rallies up. Closes in this small little imbalance there. I'm watching the buy side liquidity there. And this old sell side imbalance, buy side inefficiency. They might want to punch it up in there so we could still see a high, low, run up in there. And then we'll see, does it break down lower and dollar goes higher, or does the dollar go lower and this thing just keeps on going higher and eventually challenging the consequent correction of this wick and then the old high. That I don't know yet. So we're just watching here for right now. Pound dollar, hourly chart. Order block in here. We trade down into it. Start to accumulate. Rallies. Down close candle. Picks up optimal trade entry here. rise for the buy side liquidity here, and then consolidation. Its sell side liquidity has pulled in this level here, and we do have a smaller one imbalance there. So we have any retracements down in there. This is going to be the last line of defense, in my opinion, for the bulls. So it needs to stay above this imbalance. It can trade down into it, but it needs to get in there and reject and run higher. Otherwise, if it goes down in here and goes lower, this becomes an area of shorting for me. And 15-minute time frame for a pound dollar. Again, short-term buy-side liquidity pool, sell-side liquidity pool. Didn't run that. It was actually interesting to note that today when I was looking at it. I woke up a little bit late today, so I was wondering why they weren't able to sweep it below that. I would have done it myself, but nonetheless. Order block, fair value gap, trades into it here, runs to buy-side liquidity, and then comes back in. That does not test the old high because we don't trade support resistance, and you should not be thinking that anyway. It isn't resistance broken term support. Don't look at that. Look at this low, this high, buy side imbalance, sell side inefficiency, institutional order flow entry drill. All in here. Each one of these candles. Accumulate, bullish order block, trades into it. Is it going to rally? It does. Does it trade back down into the order block here? It does. So what could you expect? Well, what did it do here? Accumulated and rallied. It's going down into it here. What's it going to do? Accumulate and rally. So we'll see what it wants to do. I'm, again, favoring that relative equal high on the daily chart for cable to see what we get from that. And that's it for today. Short, sweet, and light. And I'm trying to work myself back into the markets. I feel a little disconnected, so I have to spend a couple days monitoring price to get a feel for where we are again. Get back in sync. So until I talk to you tomorrow, remember, we're going to be transitioning into PDF files, not videos for the daily log entries. It'll help me save time and put more work on the lessons we do on midweek and weekend edition. Okay, until I talk to you tomorrow, be safe.